As we step into a new trading week, November 9th, 2025, the message beneath the surface is getting louder, volatility creeping up, bonds pulling back, and breadth quietly improving. Let's decode what the tape is saying. Last week, volatility rose from 17.43 to 19.08, signaling a touch of fear and uncertainty returning to market. Traders are paying up for protection again, not full panic, but more caution in the air. Meanwhile, the U.S. 10-year yield remained flat week over week, 4.093% versus 4.081%. TLT, long-term bonds, remains above its 30-week SMA, but here's the key. It's been pulling back toward that SMA over the last 2 weeks. That's a sign of fading momentum. In Weinstein's playbook, this looks like a stage 3 topping behavior. Strength losing steam, hinting that bonds might be preparing for a deeper correction or consolidation phase. Now, let's dig deep into the sentiment from the options market. The total put/call ratio dropped to 0.84 from 0.86 the previous week, and the equity call/put ratio increased to 0.72 from 0.55. Translation: market participants are less fearful overall, but protecting portfolios more actively. A cautious optimism. Now let's talk market breadth, the engine behind the rally. Year-to-date, the SPY is up 14.48%, well above the average expected annual return of 8% and median return of 11%. 43.9% of S&P 500 stocks are above their 50-day MA, up from 40.1%. 54.1% are above their 200-day MA, up from 53.7%. 36.6% of stocks are in Stage 2 advancing stage, up from 34.3%. The tape is quietly improving. More stocks are rising off their bases, a constructive sign, but leadership remains narrow. Not all boats are rising yet. So what's the play? This setup screams selectivity. A quant-style desk reading this data would likely go long strong names in strong sectors, leaders, such as healthcare and utility sector. Short or avoid weak names in weak sectors, laggards, such as communication services and consumer discretionary sectors. This isn't a buy-everything market. It's a barbell environment where strength and weakness coexist. In summary, breadth improving, volatility rising, and bonds topping. That combination tells us opportunity exists, but caution wins. Key takeaway: the market is sending mixed but tradable signals. Stay tactical. By strength, fade weakness, and let the tape be your guide. The tape always tells the truth. This is data vesting, trading with science, not emotion.